Welcome to another stage analysis video. It's Sunday the 21st of May 2023. I'm going to start this weekend's video by talking about some of the stage 2 stocks and ETFs on the move this week with a bit more than average volume coming into them. By no means a comprehensive list, but I just wanted to pick out a few areas of interest at the moment that are starting to move, whether they're early stage 2 moves or making continuation breakouts, and a few testing levels as well before getting into some of the more regular weekend content. So beginning with BOTZ, which is the Global X Robotics and Artificial Intelligence thematic ETF. So this covering the AI theme as such at the moment, but obviously heavily weighted in a certain amount of stocks. If we flick through to the bots ETF page here, so you can find this just by googling it. So then click into holdings and characteristics there, and it will show you the top 10 holdings. You can show all. You go to show all, and you can see the percentage of that. So biggest holding being ISRG at 9.91% currently, and then Nvidia at 9.69%. Keyence Corp, which looks like a Japanese stock there, and ABB, another one, FANUC Corp, and then Dynatrace here. So a few from the US market here making up, you can see obviously a good chunk of it in the top 5 stocks there, almost half of the weighting of the ETF in these top 5 or 6 stocks there. So from a US perspective here, we've got ISRG, Nvidia, and Dynatrace to look at, whereas some of the smaller names starting to come through, like Path, which is also starting to move towards stage 2 at the moment. We'll talk about that one in a little bit as well, with making a new stage 2 breakout attempt recently. So go back to the actual chart here. Actually, come back to this one more. You can see if we scroll down, you can see the likes of AI, which we'll also talk about in a little bit, C3, which is the poster child of the AI theme as such. It's got a lot of obviously interest based on it just literally having the ticker of AI. I think the stock itself is unprofitable and doesn't look like the best chart in the world either in terms of its overhead resistance and the depth of the stage 4 decline that it's had, but certainly getting a lot of interest. It's a bit of the meme stock of the group, and this only makes up a 1.23% weighting in the bots ETF here, so it doesn't have a lot of effect on its movement overall. Most of that movement comes from Intuitive Surgical and Nvidia, and these obviously other stocks here in the top 10. But get back to the chart here. You can see we've made a stage 2 continuation breakout this week on some stronger than average volume here. The biggest volume it's seen since all the way back in May last year, when it started to make its first attempt to base preliminary support as such, when it first started to rebound before getting into secondary preliminary support. So for the final selling climax back down in October there. So broke out back into stage 2 early in the year here, started to clear some of the overhead resistance and move back out again. So now making a continuation breakout in early stage 2 with relative strength above the 0 line, which is the 52-week moving average of the ETF divided by the S&P 500 here. So this is this blue line through here. So with a stage 2 breakout, what we look for is for it to at least be above the 52-week average here, which is the 0 line, but ideally we want to see it well developed above it, and we want the 0 line itself to ideally be starting to flatten out. So generally get your best stage 2 moves once it starts to flatten out and then starts to turn back up again. If this is still declining, the 52-week moving average, when it breaks out, then it tends to take a little bit longer to get going, as it has to clear through some of the overhead resistance, which obviously was the case with this one as well. If we look to next stock, PLTR making a stage 2 breakout attempt in the last 2 weeks. So last week it tested the stage 2 level, didn't quite follow through. So stage 2 level was a little bit lower here. Did have a failed stage 2 breakout attempt early in the year in February there, and the secondary attempt. So technically moving into stage 2 last week on stronger than average volume there, but then this week finally following through a bit stronger, starting to clear a little bit more resistance here. Still not completely clear of some levels here. You can see this area has been tested a few times, so still got a bit more work to do. If we put an Ichimoku cloud on this, start to see some of that overhead resistance that's still not completely clear of. You can see it's still got a little bit more work to do in order to clear the resistance from this deep stage 4 decline that it had. So potentially could need to go sideways for a little bit and start to move up and out. So it's the kind of thing we'd be looking for there. AI, on the other hand, so like I said, this is the poster child for the AI theme at the moment. It gets a lot of attention online, but obviously had a lot of overhead resistance due to the extreme stage 4 decline that this one had from when it was the initial IPO advance and rolled straight over into a deep stage 4 decline. So it was a fairly shallow base once it started to break out into early stage 2. So this had a V bottom move from stage 4 B minus straight up into stage 1 into stage 2 in a very, very short space of time without much of a base forming. So when that happens, you often get a secondary basing structure form as you've still got a lot of overhead resistance. So again, if we put a cloud on this, you can see it's been moving through, working through its resistance, and it's now getting towards the end of that resistance zone. So potentially starting to move towards clearer skies here. If we go back to the daily chart on this one, so it's only been highlighted twice in the watch list this year. Got highlighted on this bar here back in January, and then I highlighted it again on this bar here as it retested the 200-day moving average after this distributional range here. Obviously talked about that quite a lot during the time, obviously at the buying climax in the near term there, and then obviously the classic Wyckoff structure to developed with your up thrust after distribution and significant reversal here. This is what we call a reversal significant bar. So starting to move back up and out again, starting to put the ATR bars on this. You can see now recovered the free ATR level briefly, starting to pull back in. So at the moment, sort of signs of a short-term uptrend developing again, but obviously within a strong resistance range here. This bar here, obviously the major resistance zone at the moment for it to clear. So it could need to go sideways for a while here. Might need to chop around a bit. Obviously still a lot of volume coming back into it again with this move back through the 50-day moving average, but still a lot of distribution happened through this area. But if we look at the weekly chart, you can see obviously a massive change in the volume profile. The 30-week moving average started to turn up through this area. It's now recovered the 10-week moving average in the short term here. So we need to see this continue to develop. Potentially could be building a broader, obviously, consolidation structure here with the up thrust and now spring type action at the bottom. So if this does turn out to be a spring, you'd be looking for sign of strength rally to push it up and out of the range, potentially start to push higher, but obviously going to be a lot of overhead resistance to deal with still due to the depth of this. So the fact that it's got strong volume could obviously help it clear resistance earlier, but it's obviously still a very tentative stage with this one, as it's obviously got a lot of interest going on. And so a lot of the shorter term traders are very active in this one as well. Look at INOQ, another one from the theme, starting to make a stage 2 breakout back here. So I highlighted it in the watch list on the stage 2 breakout day. So we go through. So this highlighted it on the stage 2 breakout day, got highlighted a few more times through here, and then on this bar here was the last time I talked about it. So it's been highlighted 4 or 5 times in the watch list since the stage 2 breakout. So that's the last time it was highlighted in the watch list at the moment. So it's had a really decent continuation move here. Obviously run a long way in a short space of time since that move there. So over 60%. So we look at it on a weekly chart here. You can see obviously stage 2 continuation move in early stage 2 on strong volume. The pullback here was on shallower volume. So obviously in the breakout was on more than 2 times the average weekly volume. So showing the characteristics that we look for, but again, it still hasn't cleared this major zone. So this being a SPAC from back in 2021 here, you can see the $10 level is obviously a key area. So it hasn't yet got through that key $10 level, which obviously a line in the sand for those SPAC stocks once they start to get up and through those, start to become a little bit more interesting. But at the moment, this one's still underneath that, obviously, which would be significant resistance zone. And again, if we stick the Ichimoku cloud on this, I always like to do that. You can see there's still a lot of overhead resistance to deal with. So this one could need to go sideways for many months yet in order to start to clear that overhead resistance. So a lot of work to do in that one. Next up, let's talk about DT. So this was, I think we said 4.73% of the BOTS ETF holding, so the third largest holding in the AI ETF there. So we did have a early stage 2 breakout attempt that failed back here. So it started to move out, potential stage 2, but came back in, failed, undercut the 30-week moving average there. So would have stopped out an investor stop loss position, but it's now recaptured, so starting to move back up and out into stage 2 again. So it's starting to clear. We've got a fairly decent base structure on this one. You can see the majority of the price action formed in the upper half of this structure here. So you can see we break this down into two halves. Majority of that price action's formed in the upper range here. So showing constructive action, the 30-week moving average turning up, the 10-week moving average above and rising, getting towards the top of that structure there. So looking for this one to potentially form the backup range is the next point in the stage analysis method. So look for a move back, and when it does, we don't want to see it come back below the breakout level. Ideally, don't always get that, so potentially you want to see a backup move come back in there, and then that's potential where you look for your secondary entry to develop or on a continuation potentially. So at the moment, starting to look, this one's looking quite interesting, but obviously extended in the short term. You see relative strength above a rising zero line here, starting to outperform above that and clearing the highs from that January failed breakout attempt there, but obviously starting to get away from the older resistance area. So again, if I drop into this, stage 4 decline was fairly long and deep, but if we put the cloud on this one, you'll be able to see that it's getting towards the end or past that at the moment. So just clearing the end of the range on this one, because that base size obviously has been fairly well developed there. So we get some kind of pullback move into here, be looking for that to push up and out. So next up,